Most traders start with entries. I start with eliminations, the power of the pause, power of being selective. All right, so before I ever think about taking a trade, I want to determine whether the market deserves my participation, right? My objective is to identify the cleanest opportunity available and to determine whether participation is warranted at all. My objective is to trade well and not necessarily to make money. It is adherence to the process, and the goal desired is the consequent of following the rules, following the process. So today I'll show you the exact process I use each week on the ES. Let's start with the highest time frame, and for me it's the 4-hour time frame, which I use to determine the weekly levels as well as 4-hour levels, right? And this indicator is the weekly color overlay, which delineates the start of every week, right? So it's pretty much Sunday's price action. All right. So first things first, what I want to know is where is price likely to go, right? Market, the narrative. Where is price coming from? Where is price going? And how will it get there? Right. So we're going to look at this price action, this week's price action. So we're going to look from here to here and see if we could identify some opportunities here. And ideally, you want to trade the most dynamic run. So this would be ideal to trade this swing low or this swing low, right? To the upside, right? So let me highlight. So this is 2 weeks ago high. This will be the previous week's high. And once we get started, okay, so we have, this is what we see, right? Price opened on a 4-hour, opened here and closed here, right? So we got to open, high, low, close here. And then when the market opened, it gapped up, creating this liquidity void, creating this gap here. So you're going to highlight that. To me, that's significant, right? And you can see what price does to it. And part of the narrative is that the bodies tell the stories and the wicks do the damage. The bodies tell the story and the wicks do the damage. So you can see here that price is essentially sweeping below these the bodies of these candles and staying above this previous week's high. So this is for me the most significant level. It's a high time frame level. So we have a drop below, we have a reclaim. We have a drop below, retest, reclaim. Drop below, reclaim, right? And you want to think in terms of discount premium. So this would be the next, that low to this high. And let's just walk that out. I would normally just eyeball that and not do all this clicking, but all right. So this is using the wicks. So we have this swing low. Swing low is a low with a higher low on both sides of it. Swing high is a high with a swing low on both sides of it. That's here and here, like a lower high on both sides. And that's the top of this range, and this is the low of this range. So obviously all of this is part of a bigger range from here to here, but price took out this high, this high, this high, and then consolidated essentially. All right. And from here, now we see that price is holding the potential is for price to go higher. So we have the consolidation. All right, so we can continue here as well. So 4-hour internal range liquidity here into this liquidity void. External, took out this high, took out that high, came back down, internal. Traded back into this bearish fair value gap. You wanted to highlight that, good. You can see what price is doing in that regard. And we have internal, external, rated this low here on both of these relative equal lows. Let's make that a little fatter. So we have sell side liquidity rated. This is the first sign here, the purge. So we see the purge happen here, right on the sell side. And then we want to go down to, I go straight down to the 15-minute time frame. All right, so this is the low that was rated. And why is this significant, right? We already determined the previous week's. Let's take that off. Is this right here, right? Previous week's high. We can see that there, the black line, previous week's high. Right, so we still see price consolidating. We can tighten this up now because the range is, it's no longer here to here now. It's technically from here, this swing low, still the same swing high. Well, this one's a higher high, so we can adjust that to there. And if you're familiar with ICT, optimal trade entry, then you know 70.5 is a level. I usually don't include it. 61.8 is good enough for me, but you're gonna have the potential for more drawdown. With that is if you're this optimal trade entry, purge and revert till price ran this low, and we don't need to enter here on this turtle soup entry. This is, you may feel like, hey, I'm catching a fallen knife. You don't have to take this entry. You can wait for the low risk buy, which is here, Thursday. Let's turn back on to, this is the after hours, technically. Right, electronic trading hours background. I just turned it on so we can clearly see like the real market open. Any light. This is future, so you can trade all of this, right? And you can see them all. If you was trading the New York session, you can see the entries right here. So you have an entry here. So you have run on stops. You have a market structure shift is here above this candle's high. Let's just paint that black. So this is your market structure shift. Then you have a pullback into an imbalance. And in this case, for me, it's a balanced price range because you have this bearish fair value gap followed by a bullish fair value gap. So you have an entry here if you like, or so that's one, right? So I took that off. So we see that the larger model on the daily, on the 4-hour chart, the weekly entry was an optimal trade entry. So now we fine tuning it so we can actually trade the dominant run. And this is followed by high impact news. The other days there was no high impact news. As we can see up here, right? 8:30, We had GDP, and other days was moderate news. So there were obviously there's opportunities here. We're going to focus on the dominant run, the largest price run here. And as the model is taught, optimal trade entry model, that 2 standard deviations is sufficient for an exit, right? Let's put, everything's not, all right, here we go. And then let's put the price back on, and let's make it a little bigger. So we can see, so we see the entry here, and we also see the retest, the reclaim. You can say reclaim, this to reclaim, this to retest at that same level, right? This high is, this low is 75.15, and the low of this candle yeah, guess it's too much things going on here. Let's see. All right, and the low here is 75.15. So we're not looking for precision necessarily, but that's to show the reclaim here into an imbalance. Optimal trade entry long, and we have this 4-hour bearish fair value gap. Is that bearish that we highlighted here? So price, it's naturally should send prices lower. Intra-week highs here that rated that. So we have, all right, back to the 15-minute. All right, so this low, this high, optimal trade entry long. We have another opportunity here. And if you missed that one, you only traded during the New York session. So we can move that here and use that swing high. So this swing low to this swing high, and we have optimal trade entry here. If you wanted to fine tune it, use the bodies, you could. You can do that. Then it's going to change the dynamic a little, right? I'm eyeballing. So in this case, we use the highest body and the lowest body, right? And we have optimal trade entry here at 9:30. 2 standard deviations for the exit. If you've kind of felt like, hey, it can go higher, 2.5. Otherwise, you can exit. Let's get up out of there. So this was a good run, and let's just use the wicks. So we have this entry model here. So you had a couple opportunities to go long just off the 15-minute chart, right? Pull back here. We have a run on stops, which is a market structure shift here as well. So we have that market structure shift and a retrace into this bullish fair value gap. I'm not gonna get too heavy. So optimal trade entry here, 9:30. This is still below equilibrium, so you could have entered on a 9:45 candle as well. Even though it's not optimal trade entry, it's still in a discount below 50%. So it ran this pre-market high with force, and it violated this bearish fair value gap with force. Then it retested it, right? Retest. So this is no longer a bearish fair value gap. It's an inverted fair value gap. And an inverted fair value gap, by definition, is it delineates or denotes a change in the state of delivery, which is before it was bullish. Now it's a clear sign that price wants to go higher. So this was another entry, and you can see on this time frame, this fair value gap was good enough for an entry higher. This is first target, and if you wanted to hold for some loose change, then you could have kind of scary maybe because it consolidated and then it pulled higher. But that's the entry, that's the model. I don't know. So yeah, so we got the purge and revert. So we got the purge here, another retrace. We have the market structure shift here, another one here, and then we have, you can kind of get heavier if you enter breakers. You have a low, high, lower low. So all of this here is a reason. It's along with this fair value gap. If you didn't see the breaker, then who cares, right? Who cares? It's not part of your trading system. Ignore it. But swing highs or swing lows coupled with a fair value gap or an inefficiency like this fair value gap makes this high, makes this level significant. So you can see if you drew this level that after it ran it came down and retested it, right? Because the gap is there. So similar to here, it ran this high here, traded higher. You can say it retested that as well, or retested that high, whatever one you want to do, and then sought higher prices. Did I leave anything out? So yeah, everything was here. 15-minute, 4-hour, 15-minute. This is the biggest run without. There's other trades here, but this had a news catalyst. This had a technical, because I'm more of a technical trader. That coupled with the news, a news catalyst, was sufficient. So this is the biggest run for the week and the most dynamic, right? The most volatile run. There's no other big bear bar or bull bar besides this one here, right? Because we had news backing it. All right, man. That's 17 minutes in. Maybe you have any questions, let me know. Anyways, that's all I got. Most traders spend their time searching for setups. I spend my time searching for conditions. The market is constantly moving. That doesn't mean participation is warranted. Identify the objective, build a narrative, wait for authorization. And in my case, authorization happens once there's a run on stops, followed by a market structure shift. And then we enter on a low risk buy in the situation. And then it's offered another low risk buy and another low risk buy, even though you can say in comparison to these entries, it's higher risk, right? But we have reasons to hold, right? You have reasons to hold, reasons to enter here. This particular trade, you may not want to take it because of this big bull bar. But for me, there's a lot going on here. I don't want to get too heavy, but let's just leave this 401. Yeah. And that's all I got. I'm actively trying to do less better, and you don't have to necessarily get heavy. This is not science class. This is an opportunity to change your life. And if you master less things, you don't even have to master it. You just need to be consistent with the one thing that you are good at. That's all I have. You guys have a successful, profitable week, and following your system is better in the long run. Peace.